Alafia. I'm Dr. Gloria Lattimore Peace, host and producer of OmniU Presents the H3O Art of Life show. And I thought of many titles for this show because I really was a little bit confused about what it was we could accomplish in an hour's time because there's so much ground to cover. But I did decide to call it Making Money Make Sense. And I hope that we won't muddy the water so that it is less clear after we finish than it was before we started. I want to introduce my guests, and then I want to read a little anthem, sort of. I want to introduce ladies first. Karen Eberhard Miller, who is a tax expert. She's from Eberhard Accounting, and Raymond Akins, who is a former investment banker and he wears a lot of other hats, but if I bring any of the others up, then you'll think I should ask him some questions about it, so I'm not going to. But actually, I was thinking, what came to my mind when I was planning this show was the Marvin Gaye song called Inner City Blues. And I thought I would just open up the show by reading some of the lyrics, and then we will go into our show. Is that all right?
Good.
Okay. Rockets, moonshots, spend it on the have-nots. Money, we make it, for we see it, you take it. Inflation, no chance. To increase, finance. Bills pile up, sky high. Send that boy home to die. Natural facts is, I can't pay my taxes. Panic is spreading. God knows where we're heading. Make me want to holler, throw up both my hands. Well, I'm not here to throw up my hands. I'm here to talk calmly and sensibly without any sound of stress to people who can answer questions that I have. And I'm just going to give a list of the questions that I want to address, and we'll see if we can get into any or all of these. First of all, I want to talk about taxes, and I know that there are a lot of taxes. There are a lot of different kinds of taxes. For me, I know about income taxes and real estate taxes and retail taxes and deferred taxes and tax benefits. I have a little familiarity with that. But Karen, I was listening and paying attention to some proposals about the tax reform that may or may not come to pass. And one of the things they said was that they made a big to-do about standard deductions being doubled, so you'd get more, deduct more on your standard deduction. And then they said, of course, you get to deduct mortgage interest and charitable contributions. The thing that they did not say was that real estate taxes would remain as a deductible. And that gave me cause for concern, because I know that real estate is a very important asset in most communities and most homes. And consequently, if you can't deduct real estate taxes, what could be the scenario if that one deduction is removed from your ordinary 1040?
Part of it has to do with the standard deduction versus itemizing your deduction. So a married couple gets $12,000 just standard deduction, and if your taxes, your Illinois taxes out of your paycheck, your property taxes, your mortgage interest, and your charities are more than that $12,000, then you're itemizing, so maybe you have $15,000 worth of deductions or $20,000. But if you've paid off your house, your mortgage is gone, you're living on Social Security, and you have $2,000 worth of property taxes, you're going to use the standard deduction. So when they say they're going to double the standard deduction to $24,000, that might actually eliminate a lot of people from even caring whether or not what their property taxes are or what their charity is, because they may not even get up to that. The government standard deduction may be more than what they could itemize.
Or less than what they could itemize. It could go both ways?
It could go both ways.
Okay.
But typically, a middle income family might have 7 or 8,000 from payroll, another 7 or 8 from property taxes, and then another 8 from their mortgage interest. So they're going to be usually under that $24,000. That's
Right.
kind of, I think when they picked that and doubled it, they kind of said this is going to cover 80 or 90% of the people.
Does it appear to you that it would?
Yeah.
You do? Okay.
In other words, a net benefit.
Right, you're actually going to get a couple $1,000s extra standard deduction than you may have with the regular
Okay.
itemizing deduction.
What if you are not a couple? What if you are a single person? You have no dependents. You know, you not female head of the household or any of those other categories that help to reduce your taxable, the taxes on your income. What about that? If you're just a senior citizen, for example, no, senior citizens may get a little something here or there. But if you are a single person, no dependents, only yourself.
You really need to look at what your itemized deductions were like this past year and compare that a single person for $12,000 and look at and say, okay, I'm getting $15,000 itemizing, but if they take away my property taxes, which might be 5 of that, then they're only going to go down 15 to 12. Oh, actually, yeah, 15 to 12, so they're only going down 3, even if they take away $5,000 of property taxes.
Okay. I know some people who pay double-digit property taxes.
So those
And
ones are going to feel that.
That's exactly right. Those people who are paying, and don't look at me in a surprised way because I was watching.
I'm not sure what you mean by double-digit property. Are you talking about the rate?
I'm saying
$10,000,
double-digit
$12,000.
property taxes. I remember when I saw the city treasurer
Well, our property taxes are double-digit.
on a television show, and she was saying that very soon, and she said already, not very soon, some people's property taxes exceeded their mortgage payments. And I thought that that just could not be, that you could be paying a larger amount on your monthly tax bill, you know, with your mortgage, along with your mortgage payment, that your taxes could be larger than that, especially if you had a really high mortgage, as some people did. But I know more than one person, this is not uncommon, that people, especially people living in suburban areas, pay double-digit taxes. So their property taxes are already through the roof.
Can you all help me understand? When we say double-digit, you're talking about
10, 11, 12, 26.
in excess of 10,000.
Yes.
Okay, all right. So single-digit is anything under
Single
10,000.
digit is anything under 10.
And in Chicago, you're talking about
Not
double-digit.
in Chicago.
Yeah, I was ready to say.
No, not in Chicago, but I'm saying
Suburbs, so suburbs, yeah.
property taxes mean something, mean a lot to a lot of people.
Yeah.
And so I didn't like to contemplate that could be something, because I knew some people who would be so adversely affected by that. But let's talk about any area of taxes that you think will be productive for our audience, especially if we can talk about ways that they can create a better way of being able to realize benefits from paying taxes.
Benefits from paying taxes?
Yes, yes. Aren't there any tax benefits?
Or benefits from paying deductions?
All right, what
to
about
get tax
deferred taxes? This probably gets into your area. When you have the kind of investments where they're not taxable as you are, or savings plan, where they're not taxable as the money is being accumulated, but they are only taxable in later years when maybe your income would be less and therefore you wouldn't have as much of a tax burden.
Yeah, so essentially you're talking like IRAs, 401ks, deferred annuities.
Okay.
So essentially you don't pay taxes on it now, and then it goes and accumulates over time, and then when you retire, you take it out and you pay taxes on it at that point.
Okay.
So the theory is if you're in the 25% tax bracket and you retire and you're in the 15% tax bracket, you've saved 10% on it automatically, and then you haven't had to pay taxes on the earnings or the interest until you actually need to use it.
Okay. Are those good investments to invest in well, here's the question. Not just are those good investments. There was a time when the employer deducted a certain amount of money from your paycheck and reserved that for you so that it would translate into a pension at the end of a period of time. Now the trend is toward self-managed investments. Your 401k is your 401k. The company is not deducting this money and saving it for you. You have to manage that investment. What does that mean? That you have investments that you have to manage. Even Social Security may be going that route. With people who don't know how to manage investments or make them in the first place.
Well, that's a real good point, because the default decision is, the argument all the time is to select equities. You know, they grow. You adjust that based on a person's age. The closer you are to retirement, you may want your income to be more or less fixed. You may want your earnings from your investments to be fixed and not have such a high, what they call speculative component. But in my experience with all of those various options, there are fees and management fees, they're what they call loads, and I'm personally not a big proponent of that kind of a vehicle. But then you must understand I'm a different kind of animal, because I'm opposed fundamentally to one's being an employee. And we talked about this earlier.
Okay.
Because employees are, in my mind, at the bottom of the barrel in this economy. And it's not to put down people who have a job or work for a living, but in a way it seems to me the system is almost designed to throttle the optimal growth of their long-term ability to accumulate wealth. I don't know if that makes any sense. I was talking with Karen earlier, and I was so fascinated because, you know, we live in a capitalistic economy, and my opinion is that the advantages has always been to those who can accumulate capital and deploy it. In other words, self-employment, you know, where you have more
Discretion.
control of your income and your earnings, and over a lifetime, the returns are just incredible. Employees, for example, your taxes are pulled out of your paycheck. every check, the taxes are taken out. Versus, if you're a business person, maybe you file your taxes quarterly or something. Correct me where I'm wrong, but in other words, the entrepreneur is given a lot more latitude, and again, over a lifetime, it makes a difference. I was telling Karen also earlier, when I attended grad school, some of the things I took away changed my whole concept about how money flows within this democratic body. Tax planning is to me a core component of all what I call life planning, because over a lifetime, and you can corroborate me on that, over a lifetime, the difference from a wealth accumulation standpoint, what you pay in taxes is going to determine to a significant extent how large or how small that figure is. So tax planning should be a component in all our life's activity, but an employee has no incentive to even investigate that unless they're in a top income earning bracket.
Well, now you know you shouldn't have brought that up, because this is just the person here
Yes.
to have that discussion.
Exactly.
And
Why do you think I'm so happy to be on your show?
You know, because it made me want to interrupt you, and I know you got a lot more to say about that, but I have to segue from that whole notion of tax planning. In the first place, I think we don't understand any of this.
Right.
We don't get taught anything like this in school. All of a sudden, you get your first job, and you're going to get $5 an hour, and you're going to work 20 hours, so you've already counted the $100 that you're going to spend. And then you see the paycheck, and a whole bunch of money is missing, and you know that you worked, and you know you can do multiplication. The thing is, nobody teaches young people what to expect if they become employees. No one encouraged them to become proprietors or business and entrepreneurs.
Right.
So we just kind of fall into adulthood with all of this information missing, but having to perform all these functions. Now, what about this tax planning? How do you do tax planning? You know, I know how to make a household budget because it makes itself. You know, the dollars come with labels on them. Send me to the housing, send me for utilities. You know, these dollars are already earmarked to go to places. So you don't really have much control or much to do with planning. How do you plan your taxes? That's just a wonderful idea.
Well, it depends on what the government's doing. Normally when we plan taxes, it's okay, based on the current tax code, we can't kind of guesstimate what's going to happen 10 years down the road, so we're just kind of winging it based on the current tax code. But if you've got a fixed income and a W-2 job, you can pretty much plan it because it's going to be similar from year to year. But when you've got throw in an entrepreneurship and a business, then you're like, okay, maybe we want to rent some of your personal property to the business. Maybe you want to invest in a lot of money in a 401k to bring down your taxes and put it in there later. So there's a lot of things you can play with to make it better.
So depending upon whether or not you are an employee or an entrepreneur,
makes a big difference.
Makes a big difference.
And can I say one other thing?
You can.
It always starts the first year you get a huge tax bill, and you say, "Oh my gosh, this is robbery." And then what do? You contact an accountant. Then they look at you. Well, should you be a subchapter S? Should you be incorporated? Should you be a limited liability company? Should you be a sole proprietorship? Then the tax planning starts, and then your obligation drops, and now you're on the path to really understanding how this system works. If you're an employee, those questions never come up. The shock is always, the impetus is always that year. You have a bountiful, let's say, cash flow or earnings, and you, as a result, pay a huge amount of taxes. Now you're motivated to go out and contact somebody like Karen and say, "Karen, I need help." The vast majority of the people who just work every day for a living
don't have to make those decisions.
Don't even go through that door. And that really is unfortunate, because there's so many ways you can, again, there's no incentive right now in the economy to save. But yet, to accumulate capital is how you launch or create an income stream to supplement whatever you're earning now. You have to save money. There's no incentives to save as far as I'm concerned.
Well, there's incentives to want to have a well-funded retirement, but people don't think that when they're young. If they were to take and earmark 10% of their earnings every year and save it some way or another, they'd be doing really well when they decided to get retired. But there's always the house, the kids, the college. There's always something that's coming up and stopping a large accumulation of savings.
It always surprised me that people didn't think that they needed to have a cushion, you know, some margin against some unexpected or unanticipated development. You know, like for example, there's a death in the family in another state, and then all of a sudden family members have to buy plane tickets, and you know, maybe if where they're going there's not enough housing, they may have to get a hotel room and what have you. They may have to contribute to the final arrangements for the loved one and so forth. And most people find this a crisis because they're not prepared for having unexpected things happen in their lives. And so when something occurs...
In other words, we don't have an emergency savings account.
Emergency rainy day savings account.
Yeah.
The furnace goes out. You got to replace the furnace. Now you have a credit card debt or some other kind of long installment debt that you have to pay, and you have interest added to it. How do you avoid buying big ticket items that have huge interest, like automobiles and furnaces and air conditioners and roofs and all kinds of other things associated with just regular daily living? If you are not prepared to meet such emergencies, should they occur, and heaven forbid more than one of them occurs at the same time.
People are just going into debt when they have the emergencies or the problems. They're not saving. We need to kind of grab the younger generation by the throat and say, save money.
Okay.
And how can they save money when their incomes are so minuscule? That's another thing. You know, that's how I see it.
Income too, Ray, and appetite. You know, there's the advertisements tell young people, tell all of us,
Yeah.
you would be better, you would be happier, you would be better, you would look better if you own these things. And so you have...
And to not own them, you are nobody.
Right.
Yeah.
So a lot of your self-esteem is tied up in your possessions or your ability, even if you chose not to buy things, that, you know, just people just know that it was a choice you made. It wasn't because you couldn't do it. So the thing is, we have advertising that creates appetites, and people want to have things, so they go and have things that they can't pay for. And then they have to start paying for them. There's a demand on their income to make these payments. And I once heard a person say they didn't understand that they had paid this big payment against their installment loan, and the balance hadn't gone down, you know, it had only gone down a little.
Right.
So much of it had gone toward interest that it didn't affect the principal hardly at all. What do you tell people about this kind of thing, Karen? Ray?
Well, if I just may add something, if you were well versed or if you're aware of how some contracts work, you would look at the annual percentage rate. They range all over the place, but I see annual percentage rates now 25%
Double digits
per annum and even higher.
Mm-hmm.
That's where, when you make that monthly payment, the interest charge chews up so much and the principal is reduced. Now, truth in lending requires that on the statement, it said if you made the minimum payment, this is how long it would take you to pay off or retire the debt. Well, if you look at that, if you know, take the time to read it, so much of the responsibility for determining the kind of quality of life we all claim we want is incumbent upon us to read the fine print. And I'm afraid that just doesn't happen so much. When you're looking at a new Nissan or BMW on the lot and the guy says you could take it home and then your payment's only so much, that settles it. I can afford $230 a month to lease this Beamer, when over the lifetime of that contract, you're giving up a huge portion of your future income. And the future will, the retribution does come into the future, because another habit with Americans and with our buying practices is that once we got something, the longer we keep it, the more the utility or the what is it, as it gets older, it's just not.
Right.
It just
becomes
doesn't mean that
as a
much
matter of
anymore,
fact,
but you're
right.
stuck with those payments.
Right.
We have such a, I don't know.
That's one way of saving, though, isn't it?
Sometimes I
Not
get
getting
mad.
those high
Yeah.
interest
Yeah.
rates.
But we aren't taught that.
We're not doing
The
that.
message is that
Karen, you got a lot of stuff in your hand. I want to know what's in those papers you're carrying.
Well, essentially, it's talking about tax reform. So there's a couple on here that talk about what President Trump is kind of pushing. But a lot of people, when they talk about the president wants this, it's really up to the Congress and Senate to actually run with his ideas and go back in committees and try to come up with some ideas that make it work. But they kind of want to make it similar to what the president wants, because he's got the final veto power on the bill. If it's too out of line, he could say no, go back and start over again. But it's a lot of, here's some vague general ideas that I want, now take it and do something with it.
So what do you have? What kinds of things are you seeing in this potential tax reform, this proposed tax reform?
Well, he wants to simplify it, so he's looking at, instead of having 6 or 7 tax brackets, just having 3 tax brackets, so people like, okay, I'm in this tax bracket, that's what my tax is. He's also looking at reducing corporation and business taxes so that we don't lose too many more corporations and leaving the country and taking the jobs with them.
What about reducing income taxes for the guy on the street?
Well, they're doing a 10% and a 25% tax bracket.
They're doing it by putting you in a category.
Well, they don't have anything at all about where the breaks are going to be. So
Okay.
right now the 10% is if you make like $10,000 or less, you're pretty much in the 10% bracket currently. But the hopes are that if you make under like 60,000, you'll still be in the 10% tax bracket. Okay. But that's up to Congress and the government to figure out.
25% is a pretty high tax bracket, isn't it?
Yep.
Yep.
But we've got the 25% tax bracket now for a lot of people.
Okay. But not saying that those people want to be in that bracket. You know, they don't want to have that 1/4 of their income, you know, be sucked up by taxes.
Right, because that's the income taxes, and then you've got Social Security taxes, and you've got property taxes and sales taxes.
Right.
And I wouldn't leave out fees. The state is real big on fees now. You know, you renew your what? You get your license plates every. I don't know how
yes.
much it costs. You know,
Right,
fee
right.
income. You know,
Tollway fees.
tollway. That reminded me of a story when I took a procession to the cemetery. I'm a funeral director, and the fastest way to get there really was the toll. I got on the tollway, and I was thinking it was 75 cents a car or something like that. It had been so long since I got on. The first booth was $1.50 a car. that wiped out everything, and I didn't have nothing to get to the. When we got to the second booth, I went through 3 booths to get to the cemetery, and fortunately, our limousine driver had some cash, and I had to borrow it from him. The point being that if you travel the Skyway in Illinois, remember when it was $1.25? Now it's like $5. So fees nickel and dime you all the time. You pay fees for your cell phone bill, your Comcast, your cable bill. The fees are all around the place, and not to mention the traffic cameras, the red light cameras, and the fines and penalties. So fees, fines, penalties, taxes, all of those things work to siphon some of your income. So when you really look at it, and again, Karen, correct me if I'm wrong, and something else I remember from business school, and that is that corporations don't pay taxes. Well, that doesn't make sense. Corporations truly don't
pay taxes?
Because they use the revenue they get from you. You pay their taxes. It's all built into the prices you pay for the goods and services you acquire.
Okay.
Can you explain that better? Or
Essentially, when they do their budget, they're saying, okay, we know we're going to physically sign a piece of paper and pay $10,000 of taxes, but we're going to increase the cost of what you buy so that we have that money to pay the taxes, so it's not really coming out of our pocket, it's coming out of the consumer's pocket.
Right.
Okay.
So we live in a fishbowl of taxes. They're all around us, and we aren't even aware. We can talk about what we pay to the IRS, and that's a good poster boy for the system. But if you just think about your outlays for
the
fees,
other monies that you're not budgeting
It's
that are
much more-
going out because you're not budgeting toll fees.
Yeah.
You're not even thinking about when you have to renew your license plates and stickers.
Well-
You know, those things are just not thought of until they occur. It's time to pay them, and then you ante up.
The last I looked, Illinois it ranks in the top 5 in terms of state and local government tax burden. Okay, what does that mean? Sometimes the thoughts that come to my mind, it'd be a nickel and dime to death. But look at our budget. We've gone on 2 years now without a budget.
What's the
people aren't getting
impact
paid.
of that besides having to pay more money to borrow money to pay the bills? The state of Illinois has no budget.
This is
So
May.
how is it paying its bills?
Small businesses or the firms that they contract out to services, they have huge accounts receivable to the government. They're not being paid.
They're not being paid.
They're not being paid.
Okay.
And the only way to resolve this is either to cut from a budgetary standpoint, you cut your spending.
Right.
And a lot of that spending is on social services, so social services would theoretically have to be cut. The
And they are.
alternative is to increase fees and revenue, which is what you're seeing.
Okay.
And if you raise taxes, then we're talking about increasing the burden, which is already in the top tier of state and local government tax burdens in the United States. We're talking theoretically about either it's untenable. They know tax burdens can break their back. There's so many people fleeing out of Illinois, going to places which are more tax haven, which was a question you brought up earlier. Should I move from Illinois? Because you're to a place where the tax burden is much more to my liking. And this is what happens. So you have flight, and the burden doesn't go away. Debts don't go away. So they fall maybe on a fewer number of people, but they have to be paid. And I think that's where we are now.
Well, reverting back to when I saw the city treasurer talking about real estate taxes and talking about how they sometimes exceeded the mortgage payment, the monthly mortgage payment. she also said that every village or municipality in the Cook County was, I will use the term underwater, that's not the term she used, meaning that they didn't have sufficient money to pay their bills. For example, they had lots of pensions. They didn't have enough funding in their pensions to pay out all of the pensions. So she said,
Chicago is
since they
notorious in
can't
that
coin
regard.
money,
Yeah.
the only way that they have to raise funds to pay bills is to raise taxes, because they can't print currency. They don't have a little printing press.
I would
in
add
the
charge
back.
fees. It's taxes and fee.
So
Yeah.
you can expect
Right.
that as these different entities within the state
Yes.
are unable to pay the bills that they must pay in order to keep services going to the residents of those communities, if they continue to have the deficits that they have no choice
Right.
but to raise taxes.
Yeah. Or lay off police,
And when you
fire,
have-
close schools.
Right, and when, in addition, when you have mortgage foreclosures all over the place, and therefore you have empty buildings and no people paying property taxes on those buildings, then you're not collecting that revenue. So the remaining people in the little village
Yes.
have to take on the weight of
The slackers or
of,
the
of the
ones in
people
that-
who weren't
yeah.
able, not slackers, these are people who
I'm sorry, that's a
suffered a
cruel word to
misfortune,
use.
maybe,
Yeah.
lost a job or something happened.
They're not
and
able to.
They're not able to pay their taxes.
Yes.
So now where there may have been 25 people in the town paying taxes, now you have 10 people in the town,
Have
and
to
the
pay
town
Yes.
has the same expenses or maybe even more. What about that, Karen?
Well, one of the big expenses that any of the municipalities have is the pensions, and the municipalities don't have any control over that because that's part of the state government employee pension. So the state says you're going to be contributing this much for all your employers. In 1984, I believe it was, the government came and said that we can start 401ks at corporations because the corporations saw that pensions are going to get too expensive for the corporations to keep up, and they got rid of their pensions and started 401ks and were able to survive the fiscal trauma of that. But all the municipalities don't have the choice. They're kind of locked into it unless we can come up with some better pension reform in the country, or at least the state of Illinois, to lower the bills for the municipalities so that they can lower the taxes for the people.
So we actually owe money that we don't know we owe. Like, if you have a car note, you owe money for a car. Or if you have a house note, you owe money for a house. And if you have a credit card debt, but your state owes money, and you owe the money because you live in the state.
Right. And the cities
And you
owe
are
money.
going to, as you say, the fees that will be assessed, the taxes, the penalties, the fees that will be assessed will affect you, and you didn't even spend the money.
Yeah.
You weren't a part of the discussion about what was going to be purchased, who was going to get paid for these services. You were not part of the discussion, but somebody is incurring debt in your name.
But you were in collusion.
What do you mean you're in collusion?
Because you elected representatives who passed on things. They were fiscally irresponsible, and you, because you didn't pay attention to the budgets, because everything was going good, you were getting what you liked, you said that's fine. And it went on for so long until it exhausted itself. The pension funds are fractions funded, in terms of their being funded, are fractions of what they actuarially, owe. But whose fault is that? When the money when the pension should have been funded, it was deferred so it could pay for something else. And usually it was a benefit that was promised by politicians to their electorate. And the electorate, because There's no civic training. You don't, how does the state operate? Well, they have budgets, they have budget reviews, they publish financial reports, and they go unread.
So you have
the
to
chickens
have,
are coming home to roost. So
you
why
have to
don't
have
we
a
just face
vigilant
it?
citizenry.
A responsible
A
citizen.
responsible.
That's
You
the
have to
word.
go to meetings. You have to go to the village hall when they say they're having a meeting, especially when they say they're having a meeting and they'll be discussing the budget.
In short, you have a vested interest in your outcome over a lifetime that you live with it. And when you default on that obligation or responsibility, don't get me wrong. I'm just stating it in a cold-hearted, factual kind of way. But we've been given every incentive we elect people, and they tell they tell us we got you taken care of. And in one hand, and the other hand behind the back is all these mounting obligations.
So you can't always say we elect people, because sometimes the people who are in office are not the people that we voted for.
Exactly.
Some of us didn't vote for the person who was
They're the
holding
ones
the
that
office.
raised the most financial support,
Right.
From vested interests, who gained from having a certain outcome.
Okay, so you've got corporations who like to have elected representatives make sure that
this legislation
certain
is passed.
legislation is not passed because it will infringe upon some area of their enterprise. Okay,
so who was it that said the
What are
chickens
we-
coming home to roost? Was that Malcolm X? Was that his statement?
Yes, that was. But I don't know why they're at my door. I didn't send out any chickens.
We're all connected too, and that's something else that's habitually ignored.
Can we talk about charitable contributions?
Sure.
Because I do know that is still on the table as a possibility of
being allowed as a
deductions.
deduction.
Now, I know that things like what you contribute to your church can be considered a deductible. Also, things that you contribute to nonprofit organizations, things that you donate, money that you give, property that you give vehicles away and whatever. What are some of the forms of charitable distributions that people can consider if they so desire?
Well, you've pretty much covered them all.
Oh.
You did a good job there.
Thank you.
But essentially, the IRS is actually cracking down on people that just write down a number on their tax return.
Mm-hmm.
So when you do a charity donation, you actually need to have the receipt and proof that you paid it.
Mm-hmm.
If you get audited, you have the receipt that you might have gotten from your mother because you didn't really have the charity donation. The IRS is actually looking at the proof of the receipt from the organization, and they're looking for your proof of payment, be it your checkbook or your credit
Mm-hmm.
card.
Okay. So if you make a charitable donation, document it.
Document it. If you want to
Right.
use it on your taxes, document it. If you're the kind of person that just throws a couple bucks when they pass the hat around at church,
Right.
that doesn't fly with the IRS.
I found
But
that out.
question about this, and
Right.
so what about a tither who's giving 10% of their income to the church? Does the church have to send them some kind of a statement at the end of the year?
The church isn't necessarily required to send them one, but if you ask the church for one, they're required to give you one, as long as they have records of it.
Right.
And I'm sure they'll give it to you because they want to make sure you continue to give them that money.
Yeah.
Right.
Yeah.
Right. So, church non-for-profit organizations pretty much covers
Well, it's
how to make charitable contributions.
the IRS. If you go to the IRS website, www.irs.gov,
Mm-hmm.
they actually have a non-for-profit charity list of all the charities that qualify for tax breaks for donating to them. So if you have someone that comes up to you and says, I'm from XYZ homeless shelter, give us a donation, you can actually go on the IRS website
and
see if they're a legitimate charity.
I often see TV ads asking for money for people in distant places. You know, there's famine in here, you know, there are refugees over there and what have you. And I'm often skeptical because I don't want to give money to people that I don't know, who may not give it to the people that I thought they would be giving it to.
Sure.
Yeah, for tax purposes, you have to give it to a United States charity. So if you give it to like the American Red Cross and they turn around and distribute it overseas, then you can be pretty confident that what they're doing with it's correct. If you're sending money to some earthquake place and it's actually going over there, then it may not be a charity because it's not a United States organization.
Right, right. So you have some advice for people who, you know, want to pay their legitimate taxes, about how to prepare so that when it comes time, you know, when the April 15th or whatever the date is looms, you know, when it is near and now everybody's scrambling trying to pull together things that they need, do you have some advice for how people can prepare in a more organized and relaxed fashion?
Organized and relaxed fashion. Well, the best way is to have a designated tax document spot during the year, not even wait until April 15th. So it could be a drawer in the desk or a shoebox on the shelf, but every time you have a receipt, maybe you gave something to the people on the corner for a Tootsie Roll and you got a receipt from them, put the charity receipts or the Goodwill receipts in the box or the envelope, and come January when you start getting all your tax forms, keep putting them in the envelope so that they're all in one place and you can find them so you don't have to go hunting around for them. Now I know like the property tax bills come out in the middle of the summer, so you pay your property tax bill, put it in the envelope so it's there and ready for you.
Okay, so save receipts, save documents.
Yep.
That's how you do it.
Yep.
And then figure out the categories later, but just save the documents even if you don't take the time for the filing, because the filing can be challenging as well. But I know we've made, you know, a lot of, we've focused a lot on saving, you know, reserving, trying to keep some money so that you can have some discretion about how it is used, how you can have better control. But your recommendation is be self-employed. That's what I get from you, is if you can, be an entrepreneur.
I think one should decide once and for all to set themselves up with the goal of taking more responsibility for self-determining their future. And that can, you start at the bottom and you work your way up. You learn. When your mind begins to look for information out in the environment, those answers come where heretofore you had never considered them before. And it could be something as simple as instead of, I'm not sure, I think the example I'm about to offer will make the point.
You got about 3 minutes to make this point or less.
I got $2,000. Buy a CD or have someone build me a newsstand and put it up on the corner and contract to get magazines and sell newspapers every day, where the return on that is infinitely larger than what I would have sitting in a bank with a CD. You don't need a degree to figure out ways to make money on your own. Sell Mary Kay. I don't care. Supplement your income by virtue of your own effort. I think, does that kind of make sense?
And I have one other thing that occurred to me. If there are if there's one income in the family and then another income joins it because somebody
Yes.
graduates or in some way
Yes.
becomes able to produce
Right.
income, continue as long as you can to live on the one income. Don't start because you can't end it.
Yeah.
Once you start living from two incomes, you will need every dime of
Absolutely.
two incomes.
Yes.
And if there's three, you'll need every dime of three.
Yeah.
So you need to figure out, if you can, how to reduce the amount
It
of
takes
money
discipline,
it takes
doesn't
to live. Yes.
It takes discipline.
It takes discipline, and certainly not to have so much installment debt that it actually spends your money for you, and you pay for something several times.
Yes.
You said you gave some example of if you were paying the minimum payment on something, how many years? Was it you? How many years it would take to pay off?
Oh yeah, that's in the fine print that's on the credit card
Okay,
statement. or
okay,
something.
so it's
A
some-
good example is a mortgage. By the time 30 years is up, you've generally paid your mortgage 3 times over.
Yeah.
Well, that
That's a
ought to
good
be
point.
that ought to be a wake up
Which
call
is why
for anybody.
15-year mortgages are so popular.
Which is why old people always wanted to pay off the house.
Tell me about
There was a
it. We gotta
Okay.
quit.